Hello everybody, welcome to this video on Cloudflare Q1 2023 earnings, which they reported yesterday. So really quickly, as a reminder to all of my viewers and all of us, I think we follow Cloudflare, but quickly, what does Cloudflare do, right? So Cloudflare is a gateway to the internet. They want to become the main gateway to the internet. Part of their mission is to secure the web, to make every web connection secure, private, fast, and reliable. And these are things that we've added on later. But the whole idea of hiding the origin server is the reason why you would want to use a Cloudflare. You hide the origin server. That way, there is not a surface attack. And the way you can think about Cloudflare, I mean my layman terms to think about Cloudflare is it's a DNS proxy, but that's kind of a VPN for websites. So there is no surface attack. If a website gets attacked, an attacker has nowhere to attack them. They are just facing the Cloudflare edge versus the traditional way where they can go to a server. So really strong positioning in the safety of websites. And of course, the benefits are security, privacy, fast and reliable connections. And these are the benefits. And really, the whole business lies on their global network. And they have updated on their website this network with a Q1 report. They now have 285 cities, so that's 10 more cities compared to the quarter prior. 12,000 network connections connected through ISP, cloud providers, large enterprises. Major size. It is the largest business of its kind. The closest competitor is Fastly, and Fastly is not even close to the size of a Cloudflare. And quickly, the business model, of course, is they try to replace a lot of the hardware-software combinations that one may have used to secure the internet in the past, and they try to be that cloud platform that replaces these old systems, just like a lot of the compute platforms or application platforms of the past are getting replaced by more service-oriented businesses today. And innovation really is at the core of what they do. They've started, of course, with application services, which is their protections of website. They have then moved on to other types of services such as carrier services as well as zero trust services, right? Trying to compete with Zscaler. Trying because Zscaler is still by far the leader. And they also moved into object storage, so multiple benefits to their network. They can use their network, and the reason why the ticker symbol of Cloudflare is net is because it's a network on which they can build powerful services and powerful applications. Some of their competitive advantages include shared intelligence, network scale, ease of use. They pride themselves on ease of use, and they pride themselves on no trade-offs. If you remember the last earnings call, the CEO was bragging about, for example, their zero trust services being faster and better in every single way, and them gaining customers. Now, maybe the CEO was bragging a little bit, but that's what CEOs do. So let's get into the crux of what matters for us investors in Cloudflare, and I own this stock. What matters, what has mattered at least this quarter, is the guidance. And first, I want to emphasize that when a CEO went out of their way to give long-term guidance, I'm using long-term guidance. And so, in my assessment of a stock, I always look at, is there a long-term guidance, right? And is that long-term guidance realistic? In my last video on Cloudflare, I actually calculated that, yes, it is fairly realistic. Long-term guidance, they gave us this 2 quarters ago, and their long-term guidance was $5 billion in revenue run rate by November of 2027. 2 quarters ago, they said this would be 5 years out. So that long-term guidance, I love, removes a lot of uncertainty for me and as to where they see the business. And of course, the market is much more short-sighted than I am. Analysts, when analysts look at a stock, they look at 12 months. Analysts' target is always 12 months. It's typically not more, except for like very heavily followed stocks. So what happened here? In Q4 of 2022. So if you look at the last video published in February that I made on Cloudflare, in Q4 2022, they had guided for a revenue of 1.33 to 1.34 billion for the full year of 2023. That is between 36 and that would have been between 36 and 38% growth. A cut compared to what it was expected prior, but nothing like a cut like we've had in some other companies. Yesterday's Enphase, for example, they seem to be going through a major slowdown. You may remember Snowflake's major cut in their guidance. Was it last quarter? That was also pretty bad. To me, that was a cut, but when I look at the adjustment of the guidance, they adjusted the guidance again, which is why the stock is down majorly right now, because they've guided down again just now by another 6%. So now the new guidance for the full year of 2023, now that we are in April and they have more of an outlook as to how the year is going to turn out, now their full guidance, new guidance, is between 31 and 32%. And hopefully at Q2 2023, we don't see them update the guidance again and tell us, oh, it's going to be between, 28 and 29%, right? That would be bad. So hopefully this is the last time they revise the guidance. Hopefully they are being very, very conservative and not being too crazy with that guidance and being conservative but that's the way it is. So many companies are going through longer sales cycles. A lot of these B2B sales in IT now take longer because every single expense is being scrutinized. This is a pattern that I've seen for all of the SaaS companies that I follow on the channel. This is not Cloudflare specific. I really want to emphasize that. And also, I see what Cloudflare tried to do, because when you look at this guidance, of course, they've increased, right? They've increased the guidance on EPS. They've more than doubled it on EPS, and they've increased it also on operating income. So you see what Cloudflare is trying to do, which a lot of other companies have tried to do. That they've tried to, sweeten the deal for Wall Street and talk about earnings, because Wall Street loves earnings, and the market should love this. Historically, the market loves earnings, but don't really care much about revenue growth. The market should love this, right? Well, not the shareholder base of Cloudflare. The shareholder base of Cloudflare does not seem to care, because the stock is down 26% today. 26%. So it's a major down stock, and that's despite them guiding EPS for full year 2023 twice what they had guided before, right? They're guiding now 35 cents against 15 to 16 cents. So they guided twice as high, yet the market doesn't care, because the market is focusing on the decline in revenue growth guidance, which is down 6%, with a new guidance 31 to 32% this year. And so, did the market start thinking like me, right? Did Mr. Market start thinking like me? Because we seem to agree here. Because I agree that revenue growth is the most important thing. And frankly, if I had seen this, I would have much rather have them tell me, oh, we're seeing 40% year-over-year growth now, but by the way, our earnings are going to be like next to zero. I would have much preferred that as a growth stock investor. And it seems like the market would have preferred that too. The market is really unforgiving with Cloudflare right now. And so we agree that it's down, that it's bad, that revenue growth being down is bad. But where we don't agree is, if you're going to drop your guidance by 6% on revenue growth, which, by the way, you made up for to Mr. Market by raising earnings expectations, if you're going to drop it 6%, does this really deserve a minus 26% on the stock in one day? Does that really deserve that? And that's where I don't agree, because I don't think it deserves that. It seems like an overreaction to me. And what I'll ask now is this really more of a case of a valuation reset? Because you may remember from all of my, least expensive stock to buy or most undervalued stock to buy video, which is the video I release on Fridays. It's going to be coming later today. On my least expensive stock to buy, or my cheapest stock to buy right now video, you may remember me repeating over and over again that I find Cloudflare too expensive. Even though I have a small position from a while back in Cloudflare, it's a small position. I haven't been adding to it because I found it to be too expensive. Well, I am pleased to announce that I do not find Cloudflare to be too expensive anymore. Cloudflare, now it is down 25%, is trading in line with the average of my spreadsheet, roughly. And this is the average of my spreadsheet. Remember, I have almost 30 hypergrowth stocks in the spreadsheet, many of them similar to Cloudflare. And my average in my spreadsheet is 34% revenue growth, 62% margin, and this is the enterprise value over trailing 12-month gross profit, over revenue growth, which is my spin on Peter Lynch's PEG ratio. I took the PEG ratio, modify it for growth stock. And if I look at this, actually net is now slightly cheaper than the average stock. It's in line, essentially. It's in line. So not a screaming bargain. This stock is still not a screaming bargain, which is why there is no rush to buy the stock. In my view, I am in no rush to add at these prices, but I may slowly ease back in that stock because it is now trading much more in line with our pricing. It's not getting ahead of itself like it was yesterday, a week ago, when it was trading 25% more. So it's not. I think the valuation is now in line with its growth. That's all I will say. And let me conclude by saying that I still need to listen to the conference call, but I am so busy I haven't had the time. So sad. Too busy right now. Haven't had the time. I will listen to it, though. I will listen to it. They make great things to listen to when you go on a walk. Anyways, I'll listen to it, and I'll make an update on the conference call if I see any red flags. Let me finish the video by showing some... essentially flat, unexciting over numbers for Cloudflare, which is no red flag. It's essentially all pretty flat, except DBNR, which is a little low. But, so from Q1 2023 to Q1 2022, you can see spent the same in sales and marketing, R&D down 1%. Can you really read anything about this? But SG&A... G&A, general and administrative expenses, are down 3%, which is nice to see because a company should get more efficient as it grows, and we want to see this down. So this is a nice positive factor. As far as the cash balance, they've increased their cash quite a bit from Q4 to Q2 to Q1, which is nice. And they keep every quarter after quarter more than $1.5 billion of cash. No red flag whatsoever here. Now, this is very nice. Fair operating cash flow and margins. We know from history that Cloudflare has a weak Q1 usually, and if you look, they did really well on this Q1 compared to Q1 of 2022. Where they were negative. Like Q1 is typically a bad quarter for them. They did very well this time with results in line with their Q2 or Q3 roughly. I mean, a tad smaller, but not that much smaller. So that was really impressive to see to see this trend up. As far as the gross margin, gross margin is stable. Went up 1% from Q4 2022 to Q1 2023. There's really not much you can read into that. I mean, it's essentially flat, not long enough to have a trend. And the last one, which is a little negative, is the strong. What they call strong. It's for us to decide whether it's strong. I think it's fairly average for a SaaS stock, perhaps even on the lower side for a SaaS stock. What I don't like, of course, is that it's been going down, right, over 5 quarters from 127% to 117%. But why is this going down? Because, and they've highlighted this in the commentary they provided with earnings, the sales cycle is elongated. And when you have an elongated sales cycle, of course, the DBNR is not going to show high because what used to take an upsell, when it used to take, I don't know, a year, 18 months, maybe less, maybe more to do an upsell, That is now longer because IT is on hold right now at so many companies because of the macro. So this is yet again a stock that is being penalized by the macro. Every single stock is hurt by interest rates and macro. It's something that we can't ignore. Interest rates are like gravity. They bring every stock down. They bring economic activity down. And Cloudflare is impacted just like so many of our stocks. But the end of the story is they're still growing and they're still guiding as of today, as of, if the market is to be believed, terrible quarter, they're still guiding above 30% year-over-year growth, which is above my threshold for stocks that I follow on the channel, which is great. So this was not investment advice. This is just entertainment. I hope you were entertained. Takes me a while to do these videos. Really appreciate if you can like and subscribe. Thank you so much for watching. Have a wonderful day.